Imagine waking up tomorrow and discovering that every American decided to withdraw their money from the bank at the same time. Sounds crazy? Well, this almost happened in Argentina in 2001, and the result was apocalyptic. Miles-long lines formed. Bank doors were welded shut. People smashed ATMs with sledgehammers in total desperation. But here's the plot twist that will blow your mind. Your money in the bank? It literally doesn't exist. Think of the bank as that clever friend who borrows money from everyone. John deposits $1,000. Mary deposits $2,000. Peter, $3,000. Total in the vault? $6,000, right? Wrong. The bank takes those $6,000 and lends out $5,400 to other people. Only $600 in actual cash remain in the vault. It's like a magician making the rabbit disappear, except with your money. This is called fractional reserve banking, a fancy name for saying banks operate with only 10% of the money you think you have. Now imagine it's 8 in the morning and everyone decides to withdraw. The first in line succeeds, the second too, but when it gets to the 10th customer, it's over. The bank literally has no more money. It's like a party where they promised pizza for 100 people but only brought 10. Panic spreads faster than a viral TikTok. Within hours, the news becomes the top trending topic. Hashtag, where's my money? First, banks would try to limit withdrawals. Only $500 per day, they'd say. Too late. People would enter collective desperation. Stores would be ransacked. Gas? Gone in hours. Food? People fighting over a bag of rice. Within 48 hours, the country would turn into an episode of The Walking Dead, except the zombies are us looking for our money. Currency would lose all value. A loaf of bread would cost $1,000, or rather, no one would accept dollars anymore. Greece, 2015. The government limited withdrawals to €60 per day. Elderly people fainted in lines under the scorching sun. Argentina, 2001. The infamous corralito. The government simply banned withdrawals. People traded refrigerators for food. Lebanon, 2019. Banks being burned down by furious mobs. A woman stormed a bank with a toy gun to withdraw her own savings to pay for her sister's cancer treatment. This isn't a movie script. It really happened. Why doesn't this happen every day? The answer is simple: trust. The banking system is like a giant house of cards that only stays up because we all agree not to blow on it. The Federal Reserve can print emergency money. The government insures up to $250,000 per account through FDIC. But let's be honest, if 300 million Americans want to withdraw at the same time, there's no printer that can handle it. It's mathematically impossible. Without functioning banks, we'd return to primitive bartering. Your iPhone for 20 pounds of beans. Gasoline sold in plastic bottles on the black market. Companies would collapse in a domino effect. No credit, no payrolls, no production. GDP would drop 50% in a month. Unemployment would explode to unprecedented levels. The government would try to create an emergency digital currency, but without the internet working properly, good luck with that. The uncomfortable truth is that we live in a financial matrix. Your money is just a number on a screen, pixels, data. The system works because we all pretend it works. It's the biggest fake it till you make it in human history. But don't panic, the chance of this happening is minimal, unless everyone who watched this video decides to withdraw tomorrow. Just kidding, or am I? Want to understand how banks literally create money out of thin air? That's the topic of the next video. Spoiler, it's even scarier than you imagine.